Welcome back to Teslafaninsight. Thanks for joining us once again. Today we bring you a fresh update from Gorden Johnson of RLJ Research, one of Tesla's most persistent critics. Surprisingly, Gorden actually is positive on Tesla for the third quarter, even though he's negative on Tesla for the fourth quarter, based on the $7,500 tax credit. We had a brief 10-minute interview with Gorden and reviewed the current state of Tesla. As always, don't forget to like, subscribe, and turn on notifications to stay in the loop. Gorden laid out 5 major points of criticism, and we'll walk through each of them along with some context and counterpoints. Number 1 is Robotaxi reality check. Gorden pointed out that the Tesla Robotaxi program still has a long way to go. While Waymo has hundreds of autonomous vehicles deployed, Tesla's full self-driving FSD still requires a passenger riding shotgun with a kill switch. Despite a decade of promises, FSD remains an unknown situation. In his words, still not fully autonomous and still not delivering on its original vision. Number 2, Q3 sales surge, backhand compliment. He gave Tesla a backhanded compliment by noting that Q3 U.S. sales will likely be strong thanks to the expiration of the $7,500 EV tax credit. That incentive is pulling buyers into Q3 who might otherwise have waited, creating a temporary spike. Then number 3, Q4 drop-off. Naturally, Gorden expects Q4 numbers to decline since many of these buyers will have already made their purchases in Q3. He sees this as a classic demand pull forward, not sustainable growth. Number 4, semi-truck skepticism. When asked about the impact of the Tesla semi-truck ramp heading into Q4 2026, Gorden was skeptical. He said it's another example of Elon Musk promising something and then not delivering. In his view, Tesla remains in its usual position, full of promising possibilities that rarely come to fruition. Number 5, semi-reality versus perception. We were surprised Gorden hadn't kept up with the latest developments on the semi based on our sources. Tesla semi production is ramping faster than expected, with a new secret sauce process involving pilot trucks starting in October. What are pilot trucks? These are vehicles run slowly down the production line to test and refine the manufacturing process. Once inspected, if they meet quality standards, they are reclassified as finished products and sold to customers. This approach is different from past Tesla ramps because the team has already been building trucks at a nearby facility for years. That experience is now being transferred to the new line. The old test line produced around 500 trucks per month, but the new semi-factory is expected to scale to 5,000 trucks monthly, with potential for the old facility to remain open for special models or even doubling their output with access to parts so much easier at the new production facility. That's hundreds of millions of dollars in added revenue without breaking a sweat. According to Next Big Future, the Generation 2 Semi includes new batteries, aerodynamic improvements, and a tri-motor powertrain with 7% efficiency increases. Tesla is targeting 50,000 annually by late 2025 into 26. One of the questions we asked Gorden was about why critics keep losing money. Gordon's reaction to the semi-ramp adds a wrinkle to the Tesla story. Why do so many respected traders like Jim Chanos and some of Johnson's clients lose money shorting Tesla? Because Elon Musk has a knack for proving people wrong. Bill Gates, Chanos, and others have paid dearly for underestimating Tesla's execution. In my view, if the semi-launch goes as planned, Tesla's stock could double in the next 6 months. The main reason for this is the fact that there's an assumption based on the semi not being produced that it means that the vehicle's not viable. And based on everything we've seen from Pepsi and their expansion of the vehicle, that's not the case. But the next question is, it's great that you're viable, but can you produce at scale? And I believe we're going to find out a resounding yes. And if that's the case, short-term traders are not necessarily going to be impressed by the new numbers coming out of the Tesla factory for the semi in Reno, but the sort of long-term value holders are going to be motivated to give Tesla low, middle, and highest possibilities of how the numbers of vehicles produced are going to impact the stock of Tesla. So as a result, it is my belief that we end up with a very nice rise in the stock price, but it may not be necessarily driven by the short-term traders one would expect, but more long-term holders. The other thing we wanted to note is that we're going to include a photo of where we are with the current Tesla semi factory. The one item to note is that the area covering the primary assembly line is actually done and covered over, while the paint shop and the stamping area remains unsealed up relative to the ceiling. And this is an interesting strategy because it allows Tesla to start production without relying on the remainder of the factory being done and the other pieces of external vehicle as well as stamped out parts as well as painted parts can still be coming in off trucks delivered from the Fremont factory, given the current structure of how they're doing the close-up of the factory. The one last item, number 7, that we'd like to cover that we reviewed with Gordon was what his opinion was of Nvidia. Gordon indicated that he's saying that he acknowledged that Nvidia's 31% market share is impressive, but raised concerns about the return on investment for major customers like Meta. Despite billions spent on GPUs and AI compute, many of these companies have not yet to generate meaningful ROI from those investments. Gordon's question pointed, how can these firms continue spending at such high rates without seeing returns? He believes this disconnect will eventually catch up with Nvidia, leading to slower growth as reality sets in and spending patterns adjust. So this segment adds a broader tech market lens to your Tesla focus episode, and it's smart move. Any rate, we want to thank you for taking time out to join us this afternoon. Next is our health tips. Just a reminder of your 25 leg lifts a day, and also another reminder that eating meals within 4 hours of going to bed results in potential, it allows the food to digest prior to going to sleep. That digestion process will enable you to get better sleep. So our consultant, if you will, is a upper respiratory doc at the University of Louisville, and he indicated that you do not want to go to bed within 4 hours, ideally, of eating, but minimal 2 hours. Otherwise, you'll end up with acid reflux issues, and if you keep doing that, you could end up with upper respiratory cancer because the stomach acids for digesting food will digest you. So we'd like to see your health get better, and in this case, this is an example of it. We also want to encourage you to consider a very light meal like a salad prior to lovemaking, because it allows the blood flow to primarily go to your extremities rather than to your stomach. So once again, we want to thank you for joining us. This is Greg for Teslafaninsight. Tschüss, au revoir, lahit road, hoda hafez, drazite ni hama. In Jamaica, we say enough respect. Arrivederci, namaste. And once again, thanks for joining us. Please take time to like and subscribe. And let's see if we can't get the Tesla double that we actually think is going to occur based on the company being heavily leveraged to the semi, which is coming on strong very quickly.